Thanks for tuning into the trade setup right here on BloombergQuint Live. I'm Neeraj Shah. I'm trying out new apparatus today. Hopefully, this will work really well on the noise front, on the voice front rather. But let's get down to markets and what could they do. Remember, we have the Maharashtra lockdown in place. Cases are rising across the country. So there's a bit of a push and pull between global markets doing well versus our markets having these individual idiosyncratic things to deal with. But first, what the US markets did, they retreated a little bit from the highs of the day. But remember, we have a 2-day move to contend with. But as you can see in the US markets, the Nasdaq Composite was down about 138 points. And by the way, it didn't just end lower during the second half of trade. I think at about 10:30 p.m. India time yesterday, the Apples and the Amazons of the world were anyways in the red. So we had a bit of a downdraft in the US markets in trade yesterday, and the futures, as we see, is also flattish. But the big event that happened yesterday was the Coinbase listing, right? That's the big talking point, and a lot of people comparing what's happening to that company versus the kind of market caps that it has versus Nasdaq and some of the others. And I know there are naysayers out there, but it is listed. This is a big moment in the crypto space, so to say, for this exchange to get listed. And by the way, Bitcoin had a fairly decent outing before just skidding a little bit in trade yesterday as well. Bitcoin is now close to $63,000. I mean, that's huge. As I said, it just come off from the highs of the day. But if you look at the last 10 days, from 56,000 to 62,500, almost 63,000 yesterday, this cryptocurrency is gone places. I mean, last year sometime it was maybe $8,000 or $9,000. Now about 62 to 63,000. That's a significant, nearly 8x jump in Bitcoin. Okay, move back to markets because of what's happening in the US markets and the slight pullback. I mean, remember the rest of Asia was also working yesterday. Some of the Asian streams have a bit of a pullback move or a flattish move, but the SGX Nifty adjusted for the holiday yesterday and the close, etc., is indicating about 100-point gap up. So you will probably have a start which is around 100 points higher in trade from where we left off in Tuesday's session. So you might see this 114-point downtick, but if you look at just the levels, I think we've about 50 to 100 points higher in trade. So that's how we are likely to start off. Now, the key is, if you just look at the trade setup for the day today, and if you just look at the derivative positioning of the FIIs, they have been net positive. And they're long derivatives on the option side as well. They've taken some bets which indicate maybe a near-term upside. And that's why I think that banking might outperform today. At least at the start, you will probably have some of the banks starting off well. Then do they come off? Maybe they do. But a very interesting note by Macquarie Capital suggested that banks are not going to be the focal point of the problem. Banks will not have an issue. Maybe insurance companies will have an issue because of the rising COVID cases, because banks are well capitalized. So it could be interesting to see what banks do today. I think tech stocks are likely to reach some key support levels post today's correction in some stocks. We know that Infi will start off lower. Will it drag some of the other IT stocks lower? It possibly could. And therefore, at those levels, having corrected a little bit for the TCS results, post the TCS results, if there's another large correction that comes into IT heavyweights, could those stocks reach some key support levels? I think they would. So let's wait and watch what happens there. I think when I spoke to dealers yesterday, they said that the realty stocks could be the dark horse in today's session. So do watch out for the DLFs, the Oberoi Realties of the world, Godrej Properties. Those could be interesting ones in the session today, as per dealing rules. What are the stocks to monitor? I'm going to spend a little bit of time on Infosys, viewers, giving you all the details so that, and you might probably have some of these, but I'm still giving you. So one, what they've done is, let's start with the revenues first, then I'll go to the buyback, doesn't matter. So first, the key takeaways from Q4. The company expects the FY22 revenue growth to about 12 to 14% in constant currency terms. If you look at Q4 revenue, that was lower than street estimates. Deal signings were lower in Q3, and the revenue guidance was just about in line with expectations. The margin guidance, though, of 22 to 24% is lower than the FY21 reported numbers, and attrition was up sharply at 15.2% versus 10%. What they've also done, of course, is given the buyback, made the buyback announcement. They've said that they've approved the share buyback. The board has approved the share buyback worth about 9,200 crores. The buyback price of up to 1750, by the way, it's up to 1750, is a 25% premium. Two things. It's a large number, 9,200 crores, but it's about 1% of the company's equity. And the maximum price of 1750 doesn't mean the retail investor gets that price. And the buyback happens, I mean, what, 4, 5, 6 months down the road. It doesn't happen tomorrow. So there is no immediacy of triggers from the buyback, but there is a support at lower levels because of this. Now the views on Infosys are divided. I'll bring you the JP Morgan view. They are saying, and I thought this is the most balanced view, they're saying that we expect the stock to be supported by the increase in dividends and the 1.2 billion market-based buyback. They are staying overweight. They continue to expect that Infosys will outpace peers in FY22. Now, two things out here, viewers. This is the Infosys of the old, which underpromises and overdelivers. So could Infosys do better than the 12 to 14% guided range? Maybe they could. This was a tough quarter, attrition up sharply, all of that. But can they do better than what they've guided to? Maybe they could. The other bit is that if Infosys corrects as much as the ADR corrected, which is about 6 odd percent, then Infosys comes about nearly in the range of 1300 to 1320. This for a stock which was already down post the TCS numbers. So there's a very sharp immediate correction that has happened, and therefore maybe, just maybe, if the shorts get cleared out and all of that, then maybe there could be a bit of a bounce as well that comes up. So you got to brace for that if you're a trader in Infosys. Don't be of the belief that the numbers are so poor that the stock will keep on drifting lower. Or if you indeed have that, then don't get unfazed if the stock bounces back from 1300, 1320, 1330. I'm just saying those levels because the ADR indicates that there will be a 5-6% correction. Let's wait and watch how it happens. Some of the smart money that I spoke to said that they'll be happy to look at some IT names if there is indeed a very sharp correction in the session today. So let's wait and watch what happens. The other stock in focus is AB Capital. They've approved the IPO of Aditya Birla Sun Life AMC. This is a very material asset management company subsidiary for Aditya Birla Capital, and this IPO should help sentiment for Aditya Birla. They will also probably do an OFS of some sort that gets in them capital for maybe some for the business activities. So this should be construed positively for AB Capital. Let's see if it reacts. By the way, the street knows of this news. This is just the approval. The fact that they will come out of the IPO was known about 10-15 days back. So no surprise out here, but it's finally happened, and therefore that should be construed positively. Steel would be in focus today because Morgan Stanley notes suggest that there will be some price hikes. Aluminum prices were higher. So we'll probably have metals as the outperforming sector of the day today, but Tata Metallics within that has come out with numbers. Revenues up 27%, margins down actually 21.6% versus 23. PAT lower by 3% at 75 crores due to a higher effective tax rate. So mixed bag numbers. One division did well, the other division did not. Revenues did okay. Margins were slightly flattish, and the profit did not because of the tax numbers. Difficult to figure out what this will do. Metals have been in a corrective mode. If metals at large do very well today, then you might well have Tata Metallics find some support as well. It's not a pure play steel company, so to say, but it gets clubbed in that metal space, and therefore you never know, could be an interesting day for Tata Metallics. Dr. Reddys, they're saying that they're going to distribute 250 million doses of Sputnik V. They have expect to get delivery this quarter. There are talks with the Indian government on pricing. This is more repercussions than just the price on Dr. Reddys, because boy, we as a country need vaccines. But this could be interesting for Dr. Reddys stock as well, so therefore I bring it up. And I really doubt that there'll be too much of a reaction on Bharti Airtel because of the announcement. I'm bringing it up nevertheless. They've announced a new corporate structure to sharpen focus on digital. They are saying that the new structure envisages Airtel Digital to fold into the listed entity, and that all future and current digital products and services will be housed under the listed entity. And that's why this is important from Airtel's perspective. Now, just bring up one view that has come in on this stock, and I think CLSA or some other has said that this kind of is a net neutral because there are also some limitations on the digital business for Bharti Airtel as a result of this. So let's wait and watch if this one reacts positively or no. By the way, speaking of brokerages, the CLSA note on Tata Motors is interesting. Post the JLR Q4 numbers, which were up about 12%. They are saying that the management has indicated positive Q4 free cash flow and FY21 break even in line with expectations. And they retain the buy and a target price of 425 rupees per share. So therefore, to watch out for Tata Motors as well. I dare say in today's session, while dealers say real estate is the sector to focus on, I think banks might just have an interesting day, and metals could well turn out to be the sector of the day. They've corrected a little bit, and there is ammo of some fuel for some upticks today. So do watch out for metals in the session. And lastly, if you believe that there's a lot of uncertainty, and some of you got a chance to hear and watch the Temur Beg interview on navigating through uncertainty, the second installment in that series comes out tomorrow. And I would urge all of you to try and catch the interview that we have done with Ritam Desai of Morgan Stanley. That comes out tomorrow. So do try and catch it. It'll help you in trying to form your investment thesis for the near term. For now, though, please stay safe. Please stay indoors unless very necessary to go out. And please wear your masks. Thanks so much for tuning into the Trade Setup. Stay safe all.